Good morning, everyone, and welcome to our webinar this morning. We will be providing an overview on the mini budget. In terms of the format for our webinar this morning, we will have our guest panel, our presenters, and then a Q&A will be at the end of our presentations, and we will also have 2 polling questions. I do encourage you to use your Q&A in your control panel, or alternatively you may use the chat room, but Q&A is better for us. So in terms of our panel this morning, I would like to introduce you to 3 of our partners at HLB Man Judd. We have Nicholas Guest, who is going to be our facilitator for today, and he's a partner in our insurance and corporate advisory. We have Mariana von Lucken, who is our partner in tax consulting, and Todd Gammel, who's our partner in our restructuring and risk. So I'd like to hand you over to Nicholas now, and he will run through with our guest presenters.
Good morning, everybody, and thank you for joining us. As most of you may be aware, yesterday the Federal Treasurer released the economic and fiscal update for July 2020. Incredibly important update in these times when there was obviously been some increased focus on stimulus being provided at the federal level to support the economy through the COVID-19 pandemic. Today we'd like to explore some of the key observations from that update, as well as some of the stimulus measures that have been announced and the impacts they may have on business. So some of the headline numbers you might have picked out from yesterday include the expected deficit to grow to $85.8 billion this year. Sorry, that's the year just ended, and that's going to grow out to $184 billion for the financial year 21. Federal gross debt will grow from 684 billion to 852 billion in 21. Huge numbers. Expected GDP will contract by 3.75% this calendar year, before growing an expected 2.5% in 2021, which is quite positive to see some forecast growth next year. Quite concerning, they're anticipating 500,000 additional Australians will be unemployed by this Christmas as compared to Christmas last year. Critical to these forecasts are some assumptions that the Treasury announced they have considered. They include the Victorian economy coming out of the current lockdown within 6 weeks, and international travel reopening in some capacity for Australia from January 2021. I think both of those are desirable from a business and a social perspective, but I think they may prove optimistic if the current case numbers, both in Australia and abroad, remain elevated. I think some positives that can be taken out of yesterday's update include that forecast growth for 2021 in the overall GDP. It's obviously apparent that the government is very committed to continue to throw stimulus at the economy, and particularly particular sectors of the economy to keep it ticking over, and that's a positive. As well as while the debt number is quite huge, as a percentage of our total GDP, it remains lower than some of our international peers. So it does mean the government still does have some flexibility to take additional actions if needed in future periods. Some of the stimulus measures which we'll run through today include amendments to the JobKeeper, JobSeeker. There's some additional loan schemes. The government's committed to funding additional training, as well as the continued early release of super for those who need it. So since the onset of the COVID-19 pandemic in March of this year, HLB have been very active in supporting our clients in a number of ways, helping them access the various stimulus packages, helping them consider their business strategies and how they can adapt those to respond to the emerging environments. To run us through some of the updated on the stimulus measures, I'd like to pass over to my colleague, Mariana von Lucken.
Just before we do that, Nick, we'd like to run the poll question at this time.
Kim, that is a very good opportunity to run the poll question.
Thank you. So I'll just run it for you now.
Thank you. What we are polling on is, so when considering the outlook for your business and industry for the remainder of the 2020 calendar year, as of today, compared to last month, how do you feel? Do you feel more positive? Have you got a negative outlook, or do you remain neutral?
Okay, I might just throw to the results of that for you, Nick.
That's quite balanced, really, and I think that is reflective of what we're seeing as well. There's definitely uncertainty in this economy, and I think looking forward, but rightfully there are some positives to be taken from the government's approach, and I appreciate why some or a lot of businesses are still neutral and probably sitting on the fence.
And good morning, everyone. Happy Friday, I should say. What I'm going to discuss today is I want to focus initially on the extension of the JobKeeper, and then I'll just mention a little bit, a few things out of the mini budget that sort of came to light. If we do repeat ourselves, whether Todd said something, I think you have to say some things a few times before people absorb it, so it shouldn't be too bad. So JobKeeper, the current JobKeeper that's in play continues until the 27th of September. So that means there's no change to it and there's no retesting. So if you were eligible back in March, April, May, June, whenever you were eligible, that continues. So no change and no retesting, just for those that are panicking. So after that, next slide, please. After that, then the JobKeeper version 2 comes into play. So in summary, it works from the 28th of September, the new JobKeeper, and it'll step down the payments. So currently the payments are $1,500, and that is in play, stays the same until the 27th of September. And it'll be split into 2-tier payments, meaning there'll be a payment, and I'll go through that in a minute actually. Employers will be required to reassess eligibility based on actual GST turnover, and I'll go through that as well. The JobKeeper version 2 is extended for 6 months. You may only get it for 3, and I'll show you why in a minute. So it'll be from the 28th of September until the 28th of March 2021, if you're eligible. JobKeeper remains open to new recipients, provided they meet the eligibility criteria. So you can come in at any point as long as you do meet the criteria. If I could go to the next slide, please. So phase 1, they call it phase 1 and phase 2. And phase 1 means you're looking at a period of 3 months from 28th of September to 3rd of January. So if you think about it now, JobKeeper ends on the 27th of September. So this will be the new 3-month period that they'll be assessing. Now, how do you assess it? So in late October, you'll be looking and going, based on your actual GST turnover for the quarter of June, so April, May, June, and the quarter of September, July, August, September, you have to look and say, you compare your June quarter to last year's June quarter. Has it fallen by 15% if you're a not-for-profit, excluding schools? If your aggregated turnover is less than 1 billion, so that stays the same, 30%, and aggregated turnover of greater than 1 billion, 50%. So the fall is the same percentage. So effectively, the criteria are the same. Eligible employees, you look at the same thing. So you look at, use your BAS for the quarter and you compare it to last quarter, and you need to meet it for both June and September quarter. So that means I'll go through an example in a minute, but June, if there's a June drop of more than 30% and a September drop of more than 30%, assume you're a 30% business, you had to fall by that. Same criteria as how you come to the 30%, then you're in for that quarter anyway, meaning those 3 months. So the payment then will be looking at paying it in 2 tiers. So you look at who your eligible employees. So eligible employees, same definition as before, as the JobKeeper, or a business participant, being if you're an owner of a business. An average, you have to have worked an average of 20 hours or more in the month of basically February. If you did work 20 hours or more, then you paid $1,200. That's what the government will give you. And the second tier is if you work less than 20 hours, again, it'll assess it at February. So you'll get $750. So again, you have to have eligible employees, meaning they would have had to be employed at 1 March, all those criteria that you already know. The ATO will still pay in arrears, so the methodology and the way it's done will be the same. And employers will continue to pay before getting the JobKeeper, just like you do now. So if you look at it, October, you will pay in your employees in those quarters, and basically then the JobKeeper will come in November, and so on. So if we go to the next slide, phase 2, I'm just going through the phases, and then I'll go through a really good example that Kim put together there. So again, we look at another period, which is 4th of January, 28th of March, 3-month period. What they're looking at here is now you have to assess. You'll have to assess your June quarter, your September quarter, and your December quarter, and make sure that has dropped by more than, say, 30%, 15%, or 50% in comparison to the prior year. Again, you're using your BAS for the quarter to compare the last year's quarter. So you use a BAS from the prior years, 2019 to 2020. Now, you need to have a fall for June, September, which you would have met, but you also have to meet that quarter of December, October, November, December, in order to get the JobKeeper version 2 for that period of January to March. Then what they're doing is they're saying, again, they look at the eligible employees, business participants, so they're still eligible. They look at the average hours and say if it's 20 or more for February, you're paid 1,000 per week, per fortnight. So it's gone down from 1,500 down to 12, down to 1,000. If you work less than 4 weeks, less than 20 hours on a 4-week basis, pre-1 March, it's 650. Again, the ATO will continue to pay in arrears, and you still have to pay your employees before you get the JobKeeper. But psychology would have gotten it for the month of September, etc., if you're already eligible. If I can go to the next slide, please. I think this is a really good slide just to show you how it works. It's going to be a lot easier to calculate it this time round. They've probably learnt from the past, and they'll give us time as well to do the assessment as usual. So if you look at 2019 actual revenue for June quarter and September quarter. So remember, we're trying to assess whether we are eligible from the 28th of September to 3rd of January. Okay, that's the first bit you're trying to do here. So you look at what was your revenue. Okay, look at your BAS and it's GST inclusive 300,000, let's say. Then situation 1 you have where in the 2020 period, your actual revenue for the June quarter, so April, May, June, is 150,000 GST inclusive. And then you can see there's a fall of more than 50% in comparison to the actual, the top line there of 2019 actual revenue. Then you look at your September quarter and you've got an actual revenue of 175,000. Again, you get that from your BAS, so very easy to access. And you compare it and it's 42. Are you eligible? Yes, because in this case, the person was less than 1 billion, as you can see on the top of this example. So you only had to have a drop of 30% or more. So in this case, yes. But you can see in situation 2 and 3, what happens if you look at it quickly is that they don't meet the September quarter, they don't mean a 30% drop, they only had 25. And in the situation 3, you can see in June they had 25%. So in situation 2, going back to that, you had a 42% drop in 25. Because it's not a 30% drop in both those quarters, you're not eligible. And the same with situation 3. Now that means because in situation 2 and 3, you haven't met it for June and September, that means you won't be eligible for that 3rd of January to the 27th of March, because you have to meet all 3 quarters and you've already failed. So really in situation 1 is the only way you're really going to meet it. So long as in the December quarter, when you come to that period, you have a drop of 30% or more, then again, you'll be eligible. But don't bother testing if you didn't meet it for the quarter before. Yeah, I think maybe go to the next slide. So that one's for a for-profit. And then we've done an example here of a not-for-profit. As you can see, for not-for-profits, you have to have a drop of 15% or more. So hence why in the example, situation 1, you have had that drop. Now, just got to get clarification as to what the not-for-profits income includes. Will it be the same? Because they are basing it on actual figures. But normally what you don't have in your actual BAS figures is donations. People don't put that into the BAS. So and as you know, with the JobKeeper version 1, the current one, is that we included donations into that calculation. The ATO has said more information will come out. But there's a really good summary, I think, those 2 examples that you can have a look through. And Treasury website has a few little examples there as well under the COVID JobKeeper version 2. Go to the next slide, please. So one thing to note out of all this, and so there's more to come. I don't think this is everything. This is just a bit of an outline of the rules and how it's going to work, but we're still in July. We've got time for the rules to come out. It's not a massive panic at the moment. So the Commissioner has the discretion to provide alternative tests where the employee work unusual hours. So further guidance is to come out by the ATO where, you know, say for example, employee was on leave in the month of February. So that 4 weeks prior to 1 March, what happens there? What happens if they're volunteering for the bushfires? What happens if they weren't employed for the whole month of February? So they will come up with little tests. The other thing to consider is when you're looking at how do you calculate the 20 hours weekly average? And they had some examples to say that full-time employee probably not an issue because it's probably more than 20 hours, so you get the 1,200 or the 1,000. Depending which quarter you're looking at. It's more about those casuals or people that work unusual hours. So they might have the first week, they might work 15, the second week, they might work 20, the third week, they might work so on. And what the example has said that you looked at 2 weeks, you take an average, it was 36 out of the 10, 15, so that you meet it. And that means you look for the 20 hours, whether it's less or more based on that. And whether you're getting paid 1,200 or 750. But we'll have more examples as we go on. Also, the Commission has discretion to set alternative tests. For example, if you don't have a comparative period, so you weren't in business then, you started in January. There will be probably an alternative test where this BAS is not lodged, so where you've got a GST group. So that's still to come. And they also may extend, and they have the power to extend the time when you pay your employees. You know how the when we're looking at March and April, we're looking to see, well, do we meet the JobKeeper? Do we need to pay our employees the 1,200, whatever it is? And say you stood some down and they're still stood down, do you still need to pay them before you're able to assess? So they'll extend that so you don't have to have paid in that fortnight, those employees likely for the first or second fortnight of October until you're able to assess being lodged that BAS for September. Not necessarily lodge it, but assess whether you do meet the fall or not. And I've gone through how you've calculated the 20 hours weekly average, and I think that's more to come on that as well. I'll go to the next slide. So really what came out of the mini budget, it was a mini budget. Our main budget, I think, is the 6th of October. The main federal budget will come out then. And I think there's more to come. We think that I could make a bold assumption that GST will go up from 10% because it hasn't moved. And that's likely how we're going to recover, or the government will recover some of its money. So what's new from the mini budget itself? It's mainly the JobKeeper. There's a lot there, but JobKeeper version 2. And I'm thinking more from a tax perspective here as well, by the way. It extended the date to December, so you can still pull out the 10,000 super. Wouldn't recommend it. I'd always ask, how long did it take you to put 10K in? But if you need it, you need it. Job Seeker slightly modified, so Job Seeker is going to still be around for those that can't get JobKeeper. but there will be some modifications. Increased the instant asset write-off. Now, this mightn't be for every business because they've got money, but other businesses might be thriving to 100. That should be 150,000 from 12th March to 31 December. So they've extended the date so you can get that instant write-off. Assets costing greater than that, also you can claim 50% deduction and then depreciation on the other 50. Also, don't forget that the second half of the cash boost is coming. So some of you would have received it in July, and some, depending what size you are, if you're quarterly, you would have got one in July and you'll get one in October. If not, if you were monthly, you probably get one in July, August, September, October. Also, they're extending the government-backed loans to 30th of June to 21. And I know a few clients have been using that, so it's really beneficial. I think that's all I had. I'll leave the questions to the end, if that's okay with everyone, after Todd's presentation.
Thank you, Mariana. That's very comprehensive. We're now going to pass over to Todd Gammel, a partner within our risk and restructuring team. He's going to run through some of his observations on the market and how some of our clients and other participants in the market are responding at the moment, and looking forward into some proactive actions some businesses may want to consider. Over to you, Todd.
Thanks, Nick. Good morning, everybody, on this wonderful July morning, particularly after the Eels won last night. I'm going to, as we have here, we're going to go through a few of the things that we're seeing from our angle, which integrates a little bit with what Mariana's saying. And one of the questions I have for her is whether that October gap that we see coming up now for the eligibility, whether that could potentially drive a few redundancies then as people determine they're not eligible for JobSeeker 2.0 and they have excess staff at that point. So that's one of the things we'll get into here. So what we see is that JobKeeper 2.0 has created some categories. It's created the good, the ones who are unaffected or have had a positive impact and are going forward, the ones that are uncertain, which were under JobKeeper but now maybe aren't, and then the ones who are continuing under JobKeeper, which obviously have an issue or issues, and some of those are controllable, some of them aren't. So we just need to work through those. The macroeconomic implications that come over the top of that, and I think everybody's aware, and we can hear the $185 million deficit and World War II sort of being referred to together, and then how we dig ourselves out of that hole. There's some other factors, as Mariana referred to, that are still unclear and will develop over the next few days to see how that plays out. And then we're looking at likely outcome for some of those businesses, where they're going to get to, what we're seeing in our restructuring market now and in the next sort of quarter, and then how we see that there are options that people are looking at and putting into place and what we think we can help people with. So next slide. So basically we see it, there's three categories. There are some businesses which have had a really positive impact out of this position. Some of them have been able to pivot and they've been able to trim costs, and they have actually come out stronger and better. Even some of the hospitality businesses that we deal with are actually finding it because they can control their costs and they're not wasting wages or any other of those variable costs. They are more profitable than where they were last year. Obviously, there's a turnover issue going forward, particularly if we have a second lockdown for those businesses, but they have had a positive impact. Some other businesses are winning, and there has been some unintended consequences out of JobKeeper, where some businesses have created a super profit or just an unintended profit because they have been able to be eligible, but also have a very profitable period because of the industry they're in or their ability to be able to adapt. They're the ones who have opportunities going forward, and they're probably in the stronger part of the economy, and they're going to have to lead out, hopefully. The uncertain ones and the ones that are probably concerned now are the ones with a reduction in turnover of that 1 to 29% who aren't eligible for JobKeeper going forward. And the impact of that turnover is likely, from our point of view, to mean that serviceability of bank loans is probably going to be an issue. There's obviously going to be an issue around profitability to drive people to continue to trade and also continue to make the effort. So in those scenarios, it's likely that there will be changes required in those businesses to make them viable going forward, and to be able to adhere with all of their obligations. That's possible at 1 to 29%. So they're the ones who can adapt and go forward and hopefully transition more towards the good. And if they can't do that, well, then they may transition more towards the ones in red. So the ones that are in trouble are the ones that are eligible for JobKeeper. So that will mean that they will be in JobKeeper for a potentially 6, 9, 12-month period. What does that mean? Is there a long-term business there? When's that long-term business going to occur? The other thing that we see across both uncertain and trouble is that that's going to require, both of these business types is probably going to require funding if they are operating at any level to fund the gap between what the government is funding in terms of what JobKeeper or not and their obligations. So that's part of the issues that we have, and we'll get to those in the thing about other factors that haven't been got through. But basically we are stagnating. The good thing I think about it is that it is separating out and creating some certainty for some of these businesses, so we are not falling off the cliff as everybody was concerned about at the back end of September. We are trying to manage the process through. Next slide. So more good news. Deloitte Economics estimated this week that up to 240,000 businesses could collapse. That's about 10% of all of our businesses across the country. I think that's a grandiose statement. I think there'll be a lot more restructuring and a lot more balance through the process, and we're already starting to see that. But the major industries identified are the hospitality, professional services, and transport. They're the ones that they've been identified of great concern. And on a macro level, so looking at what the government's released yesterday, if this is what Deloitte put together in May, and we're probably getting towards the severe if we have a bad reaction on the real GDP. GDP's actually been better than what was expected. Business investment's actually been a little bit better. The unemployment rate's probably the one that's the greatest concern. I think double figures is probably likely, and it may well not be 2022. It may well be next year, but we just have to deal with that. If the other ones are pulling up, it may help us come out softer. So there are a lot of macro issues coming through that are going to impact how smaller businesses and all businesses sort of react to this process. Next slide. So what are the other factors? So there's still a bit of detail, as Mariana said. There's still some eligibility issues that need to be worked through. So that eligibility might move around a little bit, and that will change how some businesses and how some of the economy reacts. Landlord code of conduct, how that's going to occur, and whether they adjust that in certain areas or whether they go countrywide. I think from personal experience in working with landlords and against landlords, there's varying approaches being taken, and some of that has been pragmatic and some of that has been more difficult to deal with, and they have their own issues that they're not exactly dealing straight up and down with some people. But I've also seen where tenants have been deliberately evasive and not being upfront as well. So that needs to get some certainty into it, particularly for planning purposes. There's an inherent uncertainty at the moment because we haven't worked through a disclosure period fully, and we'll probably get through that with the 30 June accounts going through that. I know our audit guys are looking at that in detail. So what's the disclosure requirement for ASX? What's the disclosure requirements for ASIC? All of those things, the banks are going to require an understanding of what impact has happened from COVID, what's happening going forward, how that works, and the ATO may require that as well as part of any arrangements, and the same, you'll probably need that for landlords as part of any deal or whatever else. The extension on winding up applications, that's about to run out as well. Are we going to continue to extend that, or is that going to go back to the normal of 21 days? Because obviously that may result in a normal volume of liquidations coming through, which has been slow for the last 6 months. And if that occurs, it may turn into a waterfall, and that may drive a lot of issues through the economy as a few people collapse. Similarly, insolvent trading provisions, so personal liability for the director has been suspended. when's that going to extend out to, or is that going to end now so that everybody has to start putting themselves into either a safe harbour or making more difficult decisions? If that's extended, the big concern that we have is that that may result in losses being passed down the supply chain. That's not sustainable, obviously, because you just keep damaging the supply chain and the economy. It's just passing it through, and it is inherently unfair to make smaller suppliers or other suppliers effectively responsible for your losses. So that is something that needs to be worked through, and that's something that needs to be clarified by the government in the near future. The loan repayments under the COVID loans, they start shortly, and they are material for a lot of people who've taken those loans out. So how are they going to be dealt with? Is that going to be delayed, or is that just going to have to be dealt with? Even if we have a second lockdown, people may have to be starting to pay those loans down, which is about $8,500, $9,000 a month. Can they do that? The next issue is obviously the bank approach to lending, because more funding may be required to keep businesses going and holding that together. And the other issue aligned with that is how the valuation of assets and the valuation of property is being dealt with, because we can see issues starting to come through where bank valuations are inherently or generally inherently conservative. We don't see that changing, and the conservatism may drive value down, which will impact the ability to be able to borrow money because the loan value ratio will be reduced. So all of those factors, along with our wonderful friend and probably the largest lender in the country still, is the ATO. And what are they? They've been very patient and passive. Are they going to extend arrangements, and where are those extensions going to get to? If they extend now and they extend out to November and December, there's little point doing that in my view. If you're going to extend to December, you probably need to extend to February. And if you're extending into February, that means is that there's going to be probably a position over December if things don't pick up or aren't as well as where they are in December and January. That could drive a number of issues, because that is generally where people have cash flow issues about paying wages and closing down, and a lot of businesses, or they're having their upswing period in retail and whatever else as the December period comes through. That needs to be balanced with a working capital structure that needs to be put in place now to be able to order the stock to be able to get through your December or have it available for December. So there's a lot of these things that are moving around that'll impact all of those aspects. Next slide. So what's that all mean? Well, for the good businesses, there's a great opportunity for them to take market share, acquire and expand. They're in the pole position, and to a certain extent we need them to do that. We need them to take some aggressive things to expand the economy and strengthen the economy, because they need to pick up a bit of the slack that's been created by the other aspects, and they need to drive some growth. The uncertain, they need to try and make some changes to impact it and get to good. Look at your cost base, look at your headcount, try and automate your business. You've got a servicing risk with any if you've got a higher level of debt, and the profit incentive is going to be diminished for a while probably. So is that going to be a negative position? That may drive some sales because of businesses and assets, because people may just say, well, I don't really want to lock down for 3 years to not make a lot of money. I'd rather just take what I can get now and move on. That's where we see the first wave probably in this uncertainty, where because they're not eligible for JobKeeper, they will probably look to trim headcount to be able to right size their business. That is probably where the first phase of redundancies will come through. That also might lead to restructuring, whether they can pay for the redundancies or not right now. And there also might lead to some formal administrations and receiverships and things like that as we work through that process. The trouble ones, I think there's a few that we're dealing with at the moment. Is there any light at the end of the tunnel for some of these businesses? Is that a train in that tunnel? Is it coming for them, or is it the actual light and they just need to hold together, as a number of businesses have effectively hibernated and all they are doing is effectively sitting there closed and just operating via JobKeeper and paying their staff, waiting for things to change and how that works going forward. I think there's probably going to be a mix there, and some people are going to start making those decisions now that the reality is coming through a bit more, that the bounce will be slower probably than what a few people were hopeful of and expected, and we may have second wave, third wave issues going forward. In terms of the market, it's been very, very slow in the restructuring and insolvency market for the last 3 to 4 months. That's aside from those major things which have been rather strategic, those major appointments and restructuring actions being taken, because the liquidations obviously slowed down without the ability to issue demands, and that has slowed down those baseline formal appointments, and the larger appointments have also slowed down because people have obviously had the suspension of insolvent trading. They've been able to get funding and been able to access JobKeeper, and they've been able to consider what their options are and wait and look, sitting in maybe a safe harbour scenario or whatever else, and wait to come out the other side. That is changing, and some of the appointments are now starting to come through, and some of the discussions that we're having is turning into actual engagements and some strategic VAs. I think everybody's seen a few of these larger groups of retail groups who've gone into VA, and that will probably be to restructure their business. They need to restructure their landlord structure, and they need to change their footprints to be able to make the business more viable going forward. And that's basically to be able to ensure that their owners are only putting in the money that they want to be able to pay for the business that works. I suspect strongly we will see a long tail of retail restructuring for a considerable period, because the issue is obviously there's a turnover issue there now, and there's also a cataclysmic change in how retail is working and moving away from the old structure. That has a flow-on effect to landlords, and we've already seen the largest landlord in the UK go into administration because it needs to restructure its debt and restructure its business. The UK is often a good indicator of where things will come through for us and in our economy, and I think that is indicative of where we will have issues in the next sort of 6 months. Next slide. So what can we do in the uncertain, and what can the troubled and the uncertain do? We always suggest 13-week cash flow, be conservative, try and work out what happens after the end of JobKeeper 1 and look for that final payment and into October and see how it works. And obviously that goes with considering whether you're eligible for JobKeeper 2 and then looking how that maps out to December. If you can work out and get comfortable around that, we always get appointments over December once cash flow gets to a point where directors realise they can't pay wages. It's unfortunately been a thing that I've seen over my 25 years in the industry. We see that every year. I think the other thing that we're looking at in our business and a lot of the businesses we're dealing with is thinking differently. Looking at the business and going, if I was setting this up now, how would I do it? And seeing whether there is a way to adapt or change it across to that. Looking at automation, thinking about how the systems can work together better, what your working capital is, and then really what your value drivers are. So where's the value in this business and how do I drive that? And try to improve that. We've got 2 months almost to be able to do that before JobKeeper 1. So that gives some adaptability to be able to move through. Might need some funding, or it might just need some sweat to be able to get that done. And that could be positioning yourself as well as possible before the JobKeeper safety net comes through or gets taken away. A consistent message, always keep a consistent message and understanding of what you're telling your bank and the ATO, and that's going to be even more necessary post-September. I would be suggesting, if you put that all together, to look for a extension into 2021 and probably to March. That will give everybody some breathing space if you need to be able to understand where you're at post-Christmas, and then hopefully as things start to open up again and we get away from this second wave of things that potentially is coming through, business is normalizing a little bit more, and you can actually start to get more comfortable and confident in your assessment. And overall, just be safe and try and protect yourselves and make sure that you're covering off all of the issues you need to do to protect your people and your customers and all of those things. And aside from that, I think that's pretty much me, and I've just got some questions for Mariana.
Wow.
Thank you very much, Todd. And we also have some questions from the participants. And if there's any other questions, please use the Q&A feature, and we will be more than happy to explore those. Todd, while I'm going through these, do you want to throw your question to Mariana?
Yeah, so I sort of talked about it before. Maz, do you think that in that 2-week period, that's going to be, so the end of September before the eligibility is determined for October, that's going to be another busy period for you as people start to come to you and make those what should I do sort of conversations?
Yeah, I think so. Again, I think it's going to be a lot simpler where you don't really have any oddity in your business. So for example, you didn't start a new business, or your employees, there wasn't employees that effectively, weren't volunteering for fire brigade or whatever it was happening. So if it didn't have those exemptions, if you like, I think it'll be a pretty straightforward calculation. I don't know about yet the not-for-profits because, whether donations are included or not, it's not clear yet, as it was previously for the JobKeeper 1, version 1, if you like, let's put it that way. So I think what will happen is that September will come, and we would have tested June. Most employers would have tested June quarter to compare it to the June quarter before. If they have had say they're 30%, 15 or 50, but say 30, if they've met that criteria, then they'll go and test. They'll have to wait to test for September. Now, usually you'd have to pay the employee within that fortnight, which would be the 27th of September to whatever in October. But the Commissioner will extend that out like they did in March, April. So you probably have until the end of October to make the payment to the employees. So it gives you time to assess. And you have to assess, basically, you would have had your BAS done for September. It's a lot easier calculation, unless there's some change, unusual circumstances. So in some cases, I think that if you haven't met June, don't go any further because you're not going to meet it, because you have to meet June and September. So in some cases, that's going to lessen the demand that existed, I think, for the March-April period. But it's getting your head around the change and understanding, how do I do it? Do I go to my BAS? Do I just pluck that figure out and compare it to the last quarter, last year, the same quarter? And that's enough. I've had more than 30% drop, perfect. Now I have to test September, and I will have more time to test it. And we will be carrying on some webinars as new legislation comes out. So when you see that we've got a webinar going, we normally hold it on a Tuesday. I think it was a Tuesday, if I remember, on a continuous basis when JobKeeper was changing. But I'm not sure when they're going to bring out the new stuff, and that will come probably in the next few weeks. Does that answer your question, Todd?
I think it does. I think for both you and Nick, does that give you the feel that over the next so September we're going to have, there's going to be a change in September, and at the end of September, so during October, we're going to have a change, and then there's going to be continual change or more change going forward for a while for a few of these businesses. So we're going to have a work through of what needs to happen, the rationalisation of a few of these things that need to occur. But will that drive opportunity, or will that be a lot more work just restructuring? So is that going to drive sales and transactions, or is that going to drive people to just effectively trim headcount and hope that they can continue and just knuckle down?
Yeah, I think it really depends on the business. Most businesses could be testing June now. So I think it's going to happen earlier than September in some cases. They've got the JobKeeper for the moment, but in the sense that, it could happen the day after the 27th of September, because if they don't meet June, they know they're not going to meet September. So
So,
you know
so
straight
they
away.
look at their options. So they look at their
Yes.
options and go, well, I might sell now. It gives
Yeah.
me some time to go to the market and whatever else.
I believe that by providing some clarity out until early 2021 in terms of the potential stimulus that's available, and obviously that's up to the government to provide additional stimulus, it is allowing for some of that future considerations, and hopefully businesses over the coming weeks will be proactive in looking at that and considering both their own organisation but also some of their counterparties who they deal with, suppliers and customers, and considering what the impacts may be for them, providing I guess an increased degree of certainty for some in very uncertain times. But it just does give some clarity over what support may be available to them, and I think you're right that some businesses will act more quickly, and if they're foreshadowing a bit of a fall off in their the cash support, to take some other actions. Mariana?
So it gives them time to consider their options and make the changes or whatever else.
Correct, and that's the importance of maintaining good forecasts and some of those other good sort of financial hygiene. So being up to date with all your lodgements and the like will allow them to have that flexibility in making some decisions.
So panelists, we've only got 10 minutes remaining on our webinar here. So Nicholas, did you want to just start going through our Q&A, please?
Absolutely. So Mariana, a question for you. So if a business hasn't to date been entered into the JobKeeper program, but as of sitting here in July, thinks they may be eligible, can they enter at this point in time?
Yeah, certainly. I mean, they can enter. You could enter July, because if you think that you're going to meet the criteria for July, which is the JobKeeper version 1, you can still meet it. You would only get it for July, August and September. So you'd only get it for those periods, so long as you meet the criteria. And effectively, you would have to make, technically you have to make the payment to those staff members of the $1,500 in the first fortnight of July. Now, if you've missed that, as long as it's, I think, done before the end of the month from other clients that we've talked to, the ATO shouldn't be too harsh on it. Because remember, when you do your, so you go into your Xero and all those systems and say, yes, you're in the JobKeeper, and you elect or nominate your employees, and you get, the nomination forms back from the employees, all those kind of things that you still need to do for July to be entitled. You're not going to get paid until August, that first or second week of August, when you go in and go into the tax agent portal or the business portal and enter that information.
Okay, so message is, if you are thinking that you have experienced a downturn now and you may be qualifying for JobKeeper, by all means, let's have a look at it and see how we can get into it.
And it's still based on projections as well for July.
Yes. Another question. So for JobKeeper Mark II, is the measurement date for employees still for the 1st of March? So they have to have been employed with your business prior to the 1st of March?
That's correct, yeah. So they have to have been an employee. So same criteria as before, as is what is an eligible employee, Australian resident, over 18, etc. So 1 March is the date. If they're employed 2nd of March, yes, they're not eligible under either scheme, under JobKeeper 2, 1, whatever. So any new staff you take on, they're not eligible.
Okay. PAYG withholding cash boost. Has there been any plan changes or extended to the previously announced measures there?
No, that's still working as usual. So the cash boost, you'll get it through your business activity statement. So if you're concerned or really don't know if you're entitled to it, you should be automatically getting it. And it should be, I've spoken to many clients. Now you recall that if you were a quarterly, you got a minimum of 10,000 if your PAYG withholding wasn't the 10. And you would get that when you lodged your March BAS, and so on. And then you could be eligible again when you lodged a June BAS for the next period. And that would be paid in 2 installments, one in June when you lodge your June BAS, and one when you lodge your September BAS, which would be in July and October. You get the the cash
So I
boost.
think the question there may be, has there been any signalling of extending that beyond the
So
September quarter?
no talk about extending that cash boost at the moment. There has been some grants out there, New South Wales grants for $3,000, but you'd had to have dropped 75% of your income, employed about 19 people or less than 1 to 19 people, and your turnover was over 75,000. So there's still some cash out there. If you're interested in knowing, in our website, at the HLB website under COVID, we have got a lot more information in there as well, so you can sort of see what's available. And if not, just reach out to us if you're not sure.
Okay.
But nothing yet.
All right. Todd, this one's probably best directed towards you. Do you think directors of small and medium businesses generally understand the impacts of trading insolvent, or do you think they need more education and warnings?
I think there is varying degrees of understanding. A lot of the businesses base their insolvent sort of trading understanding of making sure that they pay their suppliers and make sure that all of their key suppliers that they have personal relationship with are paid. But the ATO is a different matter, and some other suppliers who are less personal are different. So I think there does need to be more training and understanding. And one of the issues why the government just gave a general suspension rather than pushing people towards getting a safe harbour review and understanding what their obligations were is because people at an easy level or a straightforward or a soundbite level would not understand what safe harbour is. That education hasn't penetrated as well as what it could compared to what insolvent trading is, and they understand that they are personally, I think everybody understands they're personally liable at some level, but they don't understand how it can stick to them and what that actually means in terms of a practical sense. So yes, I think we need to educate that through, and unfortunately I think everybody is probably going to get an education in the insolvency process through this process because there will be exposure across the country.
Thanks, Todd. A couple of questions here geared towards participants in the early stage and startup businesses. So are we aware of any particular support mechanisms for startup businesses which are struggling and may not have been able to access the JobKeeper criteria? Mariana, are you aware of any specific support to that sector?
No, besides what's already available. As I mentioned, the New South Wales grants. So there are those grants around, and that was, 3,000 up to 30th of June. It was 10,000. So there might be more of those popping up. Really the research and development grant, the refund on that, that's still available. That's not new, but that's still available if you're a startup that does have research and development. You've got the cash boost, which is, again, still be available. I don't know why you didn't get JobKeeper.
I think there's sometimes some challenges in the revenue there, and I guess
Yeah.
one question following on from the job on that is there an exemption? So if some of your revenue was from one-off government grants, how would that be treated when considering JobKeeper eligibility?
Yes, normally everything is included. Whatever is included is what is your, if you look at the JobKeeper version 1, it's what your GST supplies are. So if the government grant was included and is GST inclusive, it would have been formed part of your calculations. The only organisations that may be available to exclude the government grants are the not-for-profits, which I assume in this case it's not a not-for-profit. So in most cases, the government grants are GST inclusive and they're included in these calculations. There can be grants that are excluded because they're not taxable supplies, but I would say that you'd have to have a look at the contracts.
Okay.
We're running out of time, panelists, so maybe, Nicholas, one more question.
Sure.
There's one above there about the GST.
Maz, happy for you to take the lead on that one.
Yeah, do employers have to pay super on the JobKeeper payment on or usual wage of employee that is earned less than $750? Well, I think if it's a JobKeeper payment, the answer is no, you don't have to pay super, that's no obligation. Whether it's not a JobKeeper payment, then it just comes to what the minimum amount is, and I just can't recall off the top of my head.
Okay, well, thank you so much. I'd like to thank our panellists for their information and wisdom this morning. Insofar as there may have still been some questions unanswered, our panellists are very happy to answer those after the webinar, so they will come back to you in an email. If you would like someone from the panel of experts to contact you regarding either JobKeeper, cash flow, managing the risk to your business, implication of government changes to my business, forecasting or anything else, please indicate that now through the poll, and then our panelists will contact you, as I said, within the next few days. So on behalf of the partners at HLB Man Judd, I'd like to thank you again for attending our webinar. I hope you found it informative, and we look forward to speaking with you. Thank you so much. Goodbye.